Yeah, it's definitely happening here. Look at this. A nationwide wave of evictions threatens more than 6 million families. It's not just individual people. It's 6 million families. You got to think of how many tenants and homeowners out there have a family. Like, most of these people aren't single. I'm sure some of them are, but many of them are not. They have, wives and children and husbands and aunts and uncles and brothers and sisters and sons and daughters living in these homes with them because of how bad the economy has been for the last several years, especially with COVID. Record numbers of people that are actually sitting at home and not working. Record numbers of millennial and Gen Xers and Yers that have been living with their baby boomer parents because of how bad our economy really is at the end of the day, no matter how much they like to lie about it. But this is, check this out, almost 15% of people in Monroe, Pennsylvania. Oh my goodness. 18%, I just randomly moused over a section in New York, and 18% of renting households owe back rent. Guys, that's almost 1 in 5. 1 out of every 5 people in this county in New York owe back rent. What's going on down here? 27% of people in Clarendon, South Carolina owe rent. Whoa. Could you imagine what it's like to have like a home or multiple homes or an apartment building, and it's one of your main sources of income, and you're renting it? And even if it's not your main source of income, it's very expensive to have a multi-unit home. So if you've got an apartment building, even if it's just a 2-unit or a 4-unit, flat that you're renting out, because you happen to, do well in your life and you invested some of your money to buy a rental unit, there's a good chance in Clarendon, South Carolina, there's a 27% chance that you haven't received rent money in quite a while. This is some numbers I did not expect to see when I came on this chart. Look at the way that it's affecting the southern states, too, especially the most rural areas of the country. Almost 30% of people in the Colton area of South Carolina owe back rent. Guys, this is a big deal. Where is it at? Yeah, the Supreme Court has blocked Biden's ban. Sorry about that. Let me close that ad. And you know what? Rightfully so, because the eviction moratorium, it was unconstitutional. And it was illegal. And I hate to say it, but it's the truth. Let me see here, guys. GM, thanks for coming out. Francisco, Steven, Dugan, Jason, Why Bother, Gene, Rodney, Seamus, Susan, thank you guys. No, I actually just started. I'm giving people a couple of minutes to come in. I just started rambling. I can't help myself. I can't believe that. Look at this. It's just what's going on over here in South Dakota? 20% of households almost owe back rent. Large swaths of California, owing 17% back rent. What's going on over here? 23% in Mississippi owe back rent. Yeah, this is scary. Los Angeles, let's take a look at LA. We got LA, 16.4% in back rent. So yeah, if you just think about that numbers, that's 1 out of every 6 apartments hasn't paid their landlord in quite a while. And with this eviction moratorium, they could be back on rent since way back at the beginning of the year, or even possibly since 2020. Damn, this is crazy. Okay, hold on one second, Francisco. Let me check something. If my audio is repeating. All right, is there some sort of echo going on here? Is there an issue with my audio, guys? Before I continue any further, I don't want to, go through half the video sounding like garbage. And there's a slight lag and delay in your chat response, so I'm going to give it a minute here while we mouse over some of this. And just let me know if there's an audio issue or if there's any echoes. That way I can try to fix it now. Francisco, really appreciate you coming out. Are you my boy from Twitter? Just making sure it's the same Francisco, because I've never seen your last name there before. What's up, Pulsar? Thank you guys. David, damn. Yeah, of course we're smoking. Here, man, I got a few nugs for you. What do we got here? Here, take your pick. What do you want there? Got some Girl Scout cookies. Got some other OG Kushes. Nice big nugs. I wish I could just take the nug, to be honest with you, just smoke it like this and just light it up, but I tried it. It doesn't work. The video's good, says Seamus. Thank you. Pulsar, what's up? Jason, cheers. Cheers to you guys, man. And yeah, the world is changing fast. David says, I didn't even know we could have been not paying all this time. You know, that's, if you're on the eviction moratorium, you know, if you were part of that and qualified and signed up for that, yeah, you could have been not paying your rent this whole time. But think about what your landlord's going through. And it might be a big corporation, so they're probably, even though they're feeling it, they've got a little bit of a cushion. But say you own an apartment or the home next door, and they haven't paid you rent in 6 months, and you've been paying your mortgage for your home as well as the rent for that apartment for the last 6 months. What are you going to do? What are you going to do now that the eviction moratorium's lifted? You're going to kick these people out because they haven't paid you in 6 months or 9 months. And they have no incentive to pay you at all. They may not have a job. They may not have money. You know, this is some serious shit. A lot of people, this is July 29th. People are saying, I'm terrified. Millions in U.S. face eviction as moratorium nears end. You know, and that was back in July 29th, right as of August 1st, before August 1st, before Biden illegally extended the moratorium. All right, Gilgamesh, thank you. Why bother? Jason, great to see you guys. Dose of Animals, appreciate your heads up. Nancy, hi. Life Park, Jalen, thank you guys. Feel free to ask any questions you have, okay? Because this is an open Q&A, AMA, ask me anything. We're going to be going over this stuff because it's of the utmost importance for the mother of all short squeezes, for the stock market crash, for the real estate market crash. We are going to see the worst things we've seen in our entire lives. And I hate to freaking say this because I'm a super positive person. I hate negativity and doom and gloom. But there's no lying. Look at how many, 451,000 people, it says, filed for the moratorium, you know, in this one particular area. Wow. From eviction labs, you know, like this is craziness. You know, for example, like this Las Vegas mother, you know, lost both of her jobs during Corona and has not been able to pay her $900 a month. And that sucks for her. And now she's got bad credit, and it's going to show up when she gets kicked out of her apartment. It's going to show up when the next place runs her credit check and her background check that she hasn't paid her rent and that she's owing money, and she applied for this eviction moratorium. So how's she going to get an apartment? Where are her and her two teenage daughters going to live? They're going to live on the streets, in parks, cars, under bridges. You know, in Seattle, we've got entire towns that are tents. You know, tent towns. Look, 8,000 renters in Nevada's Clark County are still waiting for approval. And it just got snatched up. The Supreme Court has blocked this, and rightfully so. I hate to say it. I'm not trying to be insensitive. But there's a lot of moving parts with this. And it's not simple as inflation or unemployment. You know, it's the stock market. It's the bank derivatives. It's the over-leveraging of these banks with 5,000% increases in credit default swaps and total return swaps, mortgage-backed securities. It's $190 trillion in unrealized derivatives losses. It's possible war in Afghanistan and China. China's new cryptocurrency, which is a digital yuan linked to gold. America is trying to pass cryptocurrency regulations in the infrastructure bill that Congress and they're going to be fighting over in this debt ceiling issue. See, Justin asks, how do I think this plays out over the next 6 months? Can I give us a high-level overview? You know what? Yeah, if you can hold that thought for maybe like another like half hour, there's so much going on here that maybe we should kind of like review briefly some of these issues before I give you my brief overview, because the overview's not looking good. And if I just tell you how bad everything is and you don't see it for yourself or like take a look at this stuff for yourself, you're going to think I'm just some guy who's out there screaming and crying that the sky is falling. And that's not my intention. You know, the Supreme Court on Thursday lifted the ban administrations, the newest federal ban on evictions, granting a bid from a group of landlords to block the projections for renters facing eviction. Landlords are hurting. Renters are hurting. Americans are in bad shape. You know, this isn't just garbage. You know, these credit default swaps really are up 5,000%. 9 states have an unemployment of almost 8%. In the second quarter of 2021, Americans' savings accounts have decreased by $2 trillion because they're paying debts and bills that they haven't paid in a long time. And that money's getting pilfered back into the system to the banks and such. It's slipping back into the economy. Instead of paying for, their rent, only 6% of the money was given out anyway. So 94% of the tenants that had previously had these, or landlords that had these tenants, 94% of those landlords never got that supposed $90 billion that was included in the Bureau of Economics gross domestic product. And they also, BEA, the US BEA also stated that the GDP will surpass its maximum sustainable level by the end of the year because we're not able to continue our output, and our output has been shrinking regardless of the money printing that's been happening. Sorry, let me move my mic a little bit. Hope it doesn't sound too bad. All right. Favorite System song? Man, I don't think I have a favorite. I love all the System songs. But really Sugar and Spiders, even though Spiders is only like a 2-minute long song, I think it's probably one of my favorites because it was from one of their original albums. Let's see. David asked, I asked you on Twitter, but if and when we do MOASS, Mother of All Short Squeeze, one of my goals has been to take my tendies and build a house for my family. We already own the land out in the country. I think that's a fabulous idea. If you own land, if you own farmland and any sort of apartment or land or homes, you're going to be in good shape as long as you don't need to liquidate it and you can maintain paying for it if you don't have tenants living in it that aren't paying you. So it's going to crash and correct hard. The real estate market's going to correct hard when all this goes down. But that doesn't mean that it's not going to come back up. So if you time it properly and you buy when everyone else has been getting kicked out and selling their homes and their rental units for pennies on the dollar because they can't afford to maintain their rent and they don't want to file a bankruptcy, or they did file a bankruptcy, or it's on short sale through a bank and now you're just going in there trying to pick up this house for a great deal so you can turn it over and possibly rent it out or just flip it once the market gets better. There's a lot of possibilities out there for you to make money. That's for sure. Black Zero. What about people losing all their unemployment benefits after Labor Day? Man, I got to move this. Sorry, it's in a bad spot right now. Back this up a little bit. Yeah, a lot of people are losing their unemployment benefits after Labor Day. A lot, and there's going to be that are looking for jobs. Yeah, here's an example of this. The New York, the state of New York, screw this website. As of August 26th, the unemployment benefits that Congress approved is set to expire nationwide in early September. So all these pandemic unemployment benefits are about to expire. The eviction moratorium is done. It's not coming back. The CDC does not have the constitutional power or the legal power as a non-regulatory body to extend this eviction moratorium. So these tenants are going to get kicked out of their homes. Because if I own the home next door and he hasn't paid me in 6 months and he's got no job and he's losing his pandemic benefits and he's not getting this $300 weekly stimulus or weekly boost and payments to freelancers, independent contractors, and long-term unemployed, why the hell would I let him stay in my house any longer? He hasn't paid me in 6 months. I need to get somebody who does have a job, who wasn't affected so badly by COVID in there. And there's not many people. Not many people like that available, that are willing to rent. Bubble Boy, yeah. It's Life Park CEO says it's going to be a huge domino effect. And that's absolutely right. And it's not just, it's everything combined. It's COVID, the people getting sick and going to the hospitals, the real estate issues, the eviction moratorium, the unemployment benefits ending, the stimulus package benefits ending, the independent contractor benefits ending, the debt ceiling crisis, the infrastructure bill, the fact that the United States Treasury can't pay its bills and it's using extraordinary measures to try to pay its bills. Meanwhile, hospitals, pensions, 401ks, police departments, and schools around the country are not getting paid, and it might take them 6 months or a year or two to finally see some of their federal funding. You know, I don't know about your kids' schools, but my kids' schools have no bus drivers almost. Buses are regularly running an hour late. You know, one of my kids' substitute teacher just didn't even fucking show up today. And nobody knew. The kids were all had to go to another teacher's classroom to tell her, hey, our teacher's not here. And they had to shuffle around and figure out a way to get somebody in there. And these kids ended up spending an entire section of their day, one semester, one period, literally reading and taking notes and just doing BS, schoolwork, because they had no teacher. So just right here in my own neighborhood, the Burger King was closed at 4 p.m. a week ago because they had nobody to work second shift. I was at Walmart and they were almost completely out of certain essentials, and I'm not even going to state what it is because then people might go out and run out and buy it. Supply chain issues are massive issues. I have a logistics company and a trucking company, and we're third-party logistics. We do distribution and warehousing. Airports and rail yards and seaports around the world, and especially here in America, don't have enough people to work the cranes and the forklifts and the offices. They don't have enough people to load these trucks and unload and load these ocean containers onto and off from these vessels and these trains in these rail yards. Okay, and it's just an example. Because there's such a shortage, prices for trucking and such are flying through the roof, but also the expenses. So all these companies are making more than ever and spending more than ever because of inflation and rising employment costs. Why bother? Ask the way things are going. What do you think of Lockheed Martin? Man, I think Lockheed Martin is here to stay, as is BlackRock and other of these companies, Lacey Whip says, I appreciate your last video. All the info condensed in one place. Great car ride. Bear on the market. You know what is? I'm not a bear. I'm a bull. I freaking hate negativity. But there's no denying this shit. There's no denying this whatsoever. Really. Let's see here. Yeah, the debt ceiling is going to be a major crisis. Major crisis issue. We can jump back around here to some of this. This is from the Urban Wire. They're a blog of the Urban Institute on housing and housing finance. And it's not just these people that are getting kicked out. Like, look at the headline. Like, this is the truth. It's going to cost us. It's going to cost you and I and all of our families a lot more money when people are losing their homes and people are jobless. Okay? So this was back in June 30th when it was slated to end, and they pushed it on further, as you can tell, But now, how many people did it estimate save? 1.55 million people were on this program back in June 30th, and probably a lot more now. Look, 4.2 million adults report risk of being evicted or foreclosed in July and August, because it's not only the tenants, it's also the homeowners, because they can't maintain their mortgages for multiple properties, for investment properties, for their all these other, anything that's further than just your mortgage. Most people can't afford it on just their salary. They need the income from their tenants. And it says even here that these adults are significantly more likely to be Black, Indigenous, Latino, and other people of color. Why? Because most people that are Black, Indigenous, Latino, most of them, not all of them, tend to rent apartments. I am half Hispanic. I'm half European. I was born in America. I'm extremely lucky and blessed. I speak multiple languages, and I've been exposed to many cultures. I grew up in Chicago, so I've seen every color and every person under the sun in one place, and many times in my life. So Chicago's a very diverse place, and a lot of these people they do rent, and it's not a racial thing. It's just a fact. Let's see, Jason says it's sad that such a small number of people are going to benefit from the MOASS, and mainly mainstream media are responsible. According to them, we are all just crazy. Yes, according to the mainstream media, we're crazy for calling out the obvious. For saying that these banks are extremely over leveraged. These numbers don't lie. Look at these trading revenues at all-time highs in second quarter of 2020 when the Fed was printing absurd amounts of money. This is what's causing inflation to be exponentially higher and higher. All right, this is the $189 trillion in derivatives, 5 times the world's global domestic product that these banks owe. And when the stock market shakes, when things like the debt ceiling and real estate takes a crash, and government is fighting over the infrastructure bill and crypto and war in Afghanistan and all sorts of other shit that could possibly happen, the dissipation and disappearing of global currents because of ice sheets melting, we're going to see that these derivatives increase even higher. And it's going to cause margin calls because these over-leveraged banks are no longer going to be able to maintain these total return swaps, credit derivatives, credit default swaps, mortgage-backed securities, the rehypothecated shares, the super senior synthetic collaborative debt obligations. The list goes on what they owe this money on. This is OTC derivatives. And look, they've been manipulating things for so bad because they have no choice. Take a look at how bad they're manipulating foreign exchange. 100%. 100% is being traded in dark pools so they can keep it at their prices. Precious metals, 100%, so that they can keep it at their pricing. Others, 100% down the fucking line. This is all dark pool. Everything on the left is centrally cleared, and over the counter means it's in a dark pool. Man, I've been blabbering for so long, man. Sorry, guys, I haven't even sparked my blunt. Give me a minute here, okay? Please ask any questions you have. The truth, high as shit, tired, and now I gotta watch this. I'm sorry, Matt. If you're tired, take a nap. Go to bed, wake up in the morning, and pop the stream on. And it should be on by then. But no, I'm glad to have you. Thank you all for coming out. I'm sorry I always jump on so late. I've got kids and a family and businesses to take care of, so I usually got to wait till pretty late to get on. I'm trying to get on at earlier and earlier times. Hopefully tomorrow I'll be on much earlier, because I do plan to go over Jay Powell's meeting tomorrow. Jay Powell is having a meeting at 10:30 in the morning, live streamed. You can live stream it online, and you're going to see all sorts of shit. He's going to tell us that inflation is transitory. He's going to say that they're probably going to start tapering in the Q4, and that's going to shake up the market. The inflation rates is going to be given out soon. The interest rate continues to change. The 3-month Treasury is looking like garbage. The 10-year Treasury and everything in between, they're terrible, terrible rates. And they show absolutely zero signs of improvement. They show signs of just getting worse and worse and worse. Take a look at this. Back in 2020, when the market crashed, they were at negative 0.05. They were actually at negative rates. And we're going to be seeing negative 0.05, negative 1.1, and worse on these Treasury yields. Let me just skip down here, just to give you guys an idea. Look at that. In 2011, they projected the Treasury bill would be worth 4.4% today. It's worth 0.06 right now. In 2011, they projected the 10-year note would be 5.4% interest. And it's actually 1.24. 1.24, guys. This is trash. Our economy's in the trash. Our stock market too. And they're pretending it's not. Look at all this money that Americans are losing. This is the Bureau of Economic Analysis. They analyzed the second quarter of 2021. It's a bloodbath in the amount of money that Americans have lost in personal income, disposable personal income, which is a fucking joke because all of our money is essential. None of us have disposable income unless we're fucking rich. Real disposable personal income, again, more playing with fucking words. Now they're calling it something different. And at the same time, our expenses have increased over $681 billion in the second quarter. They went up $538 billion in the first quarter. That's an increase of $1.1 trillion in expenses for Americans. And because of this, we all have to spend $717 more. You, me, every adult watching this on average. If you have kids, it's more. If you're single, it's a little less. But we all have to spend $717 more to survive the same fucking lifestyle that you had 3 months ago. Sorry. But yeah, the majority. You know how many people are invested in AMC and GameStop and are going to be able to take advantage of this mother of all short squeezes when this shit goes down? 0.2%. Sorry, 0.1. Yeah, 0.2% of Americans. So everybody here right now is going to be in the top 1% if you've got a decent amount of money invested in after the mother of all short squeezes. There are going to be hundreds of millions of people that lose a huge percentage of their life savings, their businesses, their homes, their jobs, their pensions, their 401ks. I could not stress this enough. It's going to be shitty. But because we're all in these positions, we're going to be just fine. As the more you, hold on, this is not financial advice, but in my opinion, the more that I invest in AMC and GameStop, when they squeeze, which is also a fucking inevitability when you're seeing things like $3 trillion in assets owned by JP Morgan, yet they owe almost $53 trillion in unrealized derivatives losses. All right? I'm not making this shit up. This is the notional amounts of derivative contracts given to us by the quarterly derivatives report from the first quarter of 2021 by the Office of the Comptroller of the Currency. Let's take a look. Savvy, dude, never scared. Show up, show out now. That's what it's about. You know, we've got to make things happen here for ourselves. We've got to take care of ourselves and our families and our future. And this whole issue with the eviction moratorium is accelerating the process. This is moving everything forward. I think at this point, a lot of the federal government and these guys, they're like, all right, let's get things rolling. Let's get the show on the road. We know what the debt ceiling is going to do to the economy and the stock market. Let's just, make things a little bit more stressed out for the people if we're going to have a great reset anyway. That's really where I think they're going with this, the great reset. A lot of people sick and unemployed, out of jobs, sitting at home. A lot of people losing their homes, losing their apartments. BlackRock and Vanguard and Fidelity and such scooping up shares of all sorts of things, scooping up real estate. Bill Gates buying the most amount of farmland in the country. He's now the number one owner of farmland. Things are going to get nuts. And see, like they said here in this article, it would be one thing if Congress had the specific authority to take the action that the CDC has taken, but they don't. So the CDC imposed this nationwide moratorium on evictions based on a statute that's decades old, and it authorized these implementation of measures like fumigation, pest extermination, but it doesn't authorize them to force landlords to keep tenants that aren't paying in their rent in these apartments. Excuse me. So here, specifically, if a federally imposed eviction moratorium is to continue, Congress has to authorize it. Congress is on fucking vacation. They're not coming back till September 20th. And when they do, they're gonna argue about all sorts of shit with the infrastructure bill. They come back on the 20th. The purple is when they come back. All these white days you see is vacation for these lazy fucks. The green and red is vacation for Congress as well, because Congress has left on the first. I'm sorry, they left on the 30th. So all this from the 31st, the entire month of August, and most of the month of September, they're off on vacation. They come back to work on the 20th of September. This is the 2021 congressional calendar. They're going to fight about this infrastructure bill and all the other shit that's been added to it. They're not going to be able to agree. 46 congressmen and Republican side have already said that they are not going to go for this. Take a quick look. Brenda says, I live alone. I have no family except for the apes. I'm 57 and scared. I don't know how to keep my money or myself safe with whatever's happening in this world. First-time investor, AMC and GME. Wow, that's... I understand where you're coming from entirely, Brenda. And I wish I had the exact answers for you. I can't say that I do. For me, I really feel strong out of all the due diligence that we've done and all the numbers that we've seen that eventually the mother of all short squeezes will pay off for myself and for many other investors around the world. It's an inevitability at this point. But you have to think smart because everything is still a gamble. Everything in the stock market is a gamble. It's worse than a casino, a pop-up casino behind a Wendy's dumpster. We know the manipulation that's going on, except the difference is there are a lot of companies out there like BlackRock and Vanguard and large institutions that have hundreds of millions of dollars in these plays of AMC and GME. And they're not just going to roll over and let and get screwed out of their money. They're here to stay for their attendees, for their profits, to take that money from Citadel and these market makers and these banks, without a doubt, without question. So do invest wisely, do be smart with your money, and make sure that you're using your brain and investing in something that is not going to tank when the market tanks. What is that, in my opinion? I think it's AMC and GameStop. Because when the market tanks, these banks and hedge funds are going to get margin called. And they're going to have to, all this money, all these 52 trillions compared to their 3 trillion measly dollars that they have here, is going to make them either go out of business or have to buy back a lot of these positions at least. And it's going to send these fucking stock share prices to the moon. Toilet paper shortage. Yeah, man, I have been stocking up on perishables. Not crazy style, but I've been stocking up on non-perishables. I said that incorrectly. Because I work in logistics and I see the supply chains. The warehouses are completely full. The ports are completely full. The rail yards are completely full. We don't have enough truckers and forklift drivers and office workers and everything in between and accountants to keep things moving. And so it's backing up further and further. So imports and exports are slowing. Because of that, plus Americans have less money than ever to invest in these things. Sorry, let me close this out. We don't need that at the moment. Look, so now over here, what's Biden doing? He's calling on cities and states, local courts, landlords, cabinet agencies to try to act to prevent these evictions, which again, they can't do this kind of thing. And there's going to be a lot of problems that come from this and a lot of uncertainty in the market. And tomorrow on Friday, Jay Powell, it's not past midnight yet here. So Friday, Jay Powell is going to talk at 10:15. He's going to say all sorts of interesting shit. He's probably going to talk about tapering and transitory bullshit and state that the economy is doing fine and we're going to be A-OK. And they're going to start tapering soon. But they're not A-OK. We've seen it. We've seen the stock market getting propped up with the RRP at a record high, the reverse repurchase program, because of the margin liquidity required by all these banks, as well as the quid pro quo status between the Fed and the government and these banks and hedge funds. The Fed has extended them this RRP, and in return, they are propping up and buying the dips in the Dow and the NASDAQ when they plummet 800 points like they did 3 weeks ago, and immediately get bought back by banks because they've got the Fed has money to burn. They're trying to burn up some of the money that they've been printing, and that's still causing inflation to get out of control, but they're still not able to do it fast enough. The inflation being transitory is bullshit. The only thing they can do possibly with more people losing their homes, losing their apartments, losing their stimulus, because that's all gone as of this month. It's just going to be one layer upon layer of the onion that's getting unpeeled. And when we're getting towards the core of this problem, there's going to be no hiding it, no matter what happens. It's like a group of dominoes, or even better yet, a Jenga effect. The Jenga effect is really going to cause some issues because they've been taking out these blocks that are holding up and propping up the economy, and it's only a short matter of time before the whole thing crumbles. The house crumbles here. Let me go to a specific, I'm trying to look for one thing specifically here that somebody replied, because I thought it was a very clever illustration of the, Jenga here. Man, sorry. Go to tweets and replies. We'll move along quickly here. I'm not going to spend much time on this here. Hold on one second. Check this out. Okay, here it is. This is what's going on as far as the bigger puzzle. And little by little, they're taking Jenga blocks out. The eviction moratorium, the real estate market issues, the cutting of the stimulus, the inflation being at such high levels. All of this is plucking away and pulling away at our economy. And eventually it's going to cause this to happen. And it's only a matter of time. The biggest contributing factor, in my opinion, is going to be the debt ceiling infrastructure argument that's going to occur. Because even though they come back on the 20th, they have 9 days to discuss it. But if 2 days prior to October 1st, they don't have an agreement, they've already stated that serious issues are going to occur. And we don't even have to ask them. We already know because what happened previously during the debt ceiling crisis. The debt ceiling dilemma. It's nuts. It's nuts. And don't forget, only 6% of the money that was promised by the government to landlords and tenants for the eviction moratorium was actually sent out. but the entire 100% was added to our GDP for the year. They're lying about our country's economic strength. I have to go down a little bit further because I want to show you the fact about the debt ceiling issues. This is what happened the last time that we had debt ceiling issues. This whole thing. Look at it. And a 2015 report from the Government Accountability Office analyzing the 2013 debt ceiling standoff found that investors reported taking the unprecedented action. They reported taking the unprecedented action of systematically avoiding certain treasury securities. They were not buying any of these shitty treasury bills in 2008 either. And they weren't doing it in 2011 and 2013. Let's go take a look and take a look at the 3-month treasury bill back in the 2011 debt crisis issue. That happened in September. Right around here. Wow. Look at that. That's debt ceiling crisis issue, September 2011. The 3-month treasury bill was at 0.0. What's it at today? Not much better. 0.06, 0.05. And we were recently at negatives. We're going to be in the negatives again very soon when all this shit starts to tumble. Let's see, Francisco asked, Francisco said, wait for the Fed to start tapering the economy. Quantitative easing is going to be reduced and banks will be dying to get all these houses for collateral. Absolutely. Absolutely. Real estate is king. The thing is that if you can't afford to pay for your mortgage or your rent, you just got screwed out of your home. I'm sorry. I'm so sorry. I need a second. This is bad. So Gio Garcia says the best we can do is help them out by buying up some multifamily homes and rent them out at reasonable prices. I like that. I like that a lot. That's a good idea. And by the way, Gio, thanks for coming through. Gio Garcia is in the military. He's currently in Afghanistan, I believe. Yeah, he was in Afghanistan. Thanks so much for your support and your sacrifice, brother. God bless you. America bless you. We owe you so much. Thank you. Look at Jay Howard says, a wonderful point. He says, watch out on the infrastructure bill for any seemingly small provisions they'll pass under the radar. That's exactly what they're going to do, man. He says, anytime there's a limited time to pass a spending bill, it's the prime opportunity for nonsense. We've seen it time and time again. Where did we see it? Clearly, I recall, we saw it with George Bush. And what was it, the Freedom Act or the Freedom Bill? Man, that's exactly what happened. The Freedom Act, the Patriot Act. That's what it was, the Patriot Act. And what do they say they're doing? Preserving life and liberty, when in reality, they are taking American freedoms. With the U.S. Patriot Act, the government has the ability to tap your phones, to tap your cameras, to tap your webcams, and eavesdrop on you anytime they want, for any reason they want. And this was all passed during issues like, 9/11, the debt ceiling issues, etc. When there's a time crunch, these are the things that are happening. And it's the exact same thing that they're doing with infrastructure bill, with crypto regulations that are very heavy in this crypto bill. And why are they doing it specifically with that? Because China does have a new cryptocurrency that they're currently working on. They announced it back in May, and it's almost finished. They're going to have a digital dollar. It's called the digital yuan. It's going to be a Chinese cryptocurrency running on blockchain linked to gold. America's fighting another race to the moon, except this time it's a race to crypto. And look, because they wanted to punish and deter terrorists, they were able to do all sorts of things using these excuses. You know, that to stop criminal abuse, to detect and prosecute international money laundering. They could say anybody. They could say that you or I are laundering money, and come out and just start eavesdropping on us to see what they can get. You know, and then build the case from there. It's crazy. So anyways, let's move back to our other subjects here at hand. You know, Costco's back to limiting water to 1 in some areas. Supply chain issues, like I told you. Nobody's investing in new warehouses. And if they are, there's still not enough people to work at them because there's not enough people to work the ones that we currently have. And distribution centers and rail yards, ports, you know, trucking companies. You know how hard it is for me to find a driver right now, let alone an owner-operator? It is extremely difficult. I'm getting calls left and right from guys, and they'll work one job here, one job there, and some of them work out for a long time, but the majority of them, they don't stick around. They either can't hack it in the industry as drivers, and they can't maintain their expenses, or they decide that they need to change up what they're doing because over the road or regional or local, whatever, might not be their thing. So everyone's got different things that they're looking for. And again, also, how many people left their jobs? 3.9 million people quit their high-paying jobs in June. This is an August 10th article. All right. 3.9 million people quit. And it says many are getting higher pay roles, but not all of them. Again, look at the U.S. quitting spree is going strong. And we dipped slightly in May. That's bullshit. 3.2 million people quit their jobs in May, and 3.9 million more quit their jobs in June. Fuck! This is why it's so hard to find good help. Because they're getting good money from the government to stay at home. Or they can't find a job in their field. The number of people who quit their jobs in June make up 69% of total separations. So, oh wow. So 69% of people with 3.9 million right here quit their jobs. But there was also layoffs, firings, and retirement, probably an extra 31% more on top of that, if I'm reading that correctly. Well, let me see. Let me answer some more questions if I can. I'm sorry if I missed your question. I really apologize. Please feel free to type it back in. There's just a lot in the chat, and I'd love to get to every question. Life Park asks... Sorry, let me go back a little further. Wow, I'm sorry I'm behind, guys. Eric Mings, thank you very much. Thunda, Vlad, thank you guys all so much, guys and gals, for coming out and asking questions. Oh, I'm sorry, your video's not foggy. I'm smoking weed and cigarettes and all sorts of shit. Sorry. My apologies. What's up, Be Real? Life Park CEO asks, do I believe the economic downward spiral will be blamed on the apes and the mother of all short squeezes? No. No, I don't think so. They can try, but there's too much other factors at play here that even if they tried, the argument will not hold water. There's too many other issues in the economy, in the country, in the real estate bubble that a lot of mortgage brokers, realtors, and other people in the industry already know about. The bubble's been popped. The bubble of America and our economy and our stock market, that thing fucking popped already. Everybody, you just have to prepare yourself and invest properly for the near future because it's a matter of time before you start. We're seeing it on the grocery store shelves. We're seeing it in the toilet paper, in Costco, limiting items to 1 again. People fighting at Walmart in 2020 over toilet paper and things like that. And then it moved on. It cycled to a next item, to paper towels, and then who knows what else, the most obscure items. And look, the latest job report says there's 8.7 million of Americans looking for work. I don't know if you guys know this, but for every 1% that the unemployment rate goes up, 40,000 Americans die. 40,000 Americans starve, or go homeless, and die for various health issues or from not having enough sustenance or from sleeping out in the cold in places like Chicago and other places in the country. or extreme heat in the South. Total non-farm payroll employment rose by 943,000 in July, and the unemployment rate declined by 0.5 percentage point to 5.4. That's not shit, guys. The unemployment rate in 9 states is almost 8% still. It just went down in other states that have a low population. Plus, a lot of people who don't qualify for unemployment anymore aren't going to go back and wait in the unemployment line again because they're not going to get it. Plus, all this stimulus that was going towards independent contractors and independent contractors who are 1099, not W-2 employees, that is also ending in September. So now you're going to have more people unemployed who don't qualify for unemployment, who aren't going to show up on the unemployment numbers. People such as myself who own a business, if I were to go bankrupt tomorrow, I wouldn't qualify for unemployment regardless of this bullshit. So I wouldn't be at the unemployment office lined up trying to get a handout, so I would never register myself with their office and they'd never know I was unemployed, which is the case for millions Uber drivers, shift workers, Instacart, personal shoppers, people who make money off of Etsy and Pinterest and are no longer able to make as much because American savings is down from $4 trillion in the first quarter to $2 trillion in the second quarter, and so on. Sorry. Oh, shit. Sorry if I just made a bunch of noise for you there. Sorry, my guys. Be Real Time says, I feel you, Marcel. The world is going to change, and meme investors will be in a good position, and everyone else will suffer very hard. People aren't working, and all job openings will be pretty much gone. Yeah, that's true. And even though job openings are opening up, our companies, we can't afford to pay so much more than the current stimulus that the people that are still receiving unemployment benefits are getting. Not to mention, I don't know if you guys know this, but student loans now need to be repaid. Okay, this is brand new. This was as of August 11th, supposedly. This has only been extended for the last time through January 31st, 2022. So beginning in February 1st of 2022, on top of everything else that's already going down, everybody, regardless of whether they're out of a home, out of an apartment, out of a job, or worse, or they just lost all their savings and pensions in the stock market crash that's about to happen during this debt ceiling crisis and infrastructure issues, come January 31st, now they're going to have to start repaying their student loans. So it's going to make poor people even poorer. Let's see, where are we at here on the chat? Let's see. Love the valuable info. Looking for some confirmation bias here. What's your price range for AMC in the next few trading days? I feel great about AMC in the next few trading days, you guys. It's going to be a beautiful thing for us. I'm going to pull it up here on my other screen so I don't just scroll around aimlessly for you. Excuse me. All right. AMC and GameStop are going to do very well tomorrow, Friday, I believe. But even if they don't, it doesn't make a difference because they're going to run real hard because these futures contracts issues that are going on that they need to buy, they need to roll them over. Okay. And I'll explain that here in just 1 second. Let me open up this screenshot that I've got. You guys are going to love this. If you watched the video yesterday, you've already seen this, but if not, you can take a look at this again. Check this out. Let me get my face out of the way. I know you guys don't care about looking at me. This is a 3, 6, 9, 12. This is a 12-month chart. It's a little more than a 12-month chart. Whatever, you get my point. This is a 3-month cyclical chart of futures that are being used to hedge against total return swaps. These banks are taking out total return swaps and exchange-traded funds and credit default swaps that package many things as well as these GameStop and AMC into them. And when they package them into them, they short the hell out of them because they can't directly short GameStop and AMC or everybody would know what the true short interest percentage. That's why back in January when Melvin Capital got cocky and decided to short GameStop directly because they thought it was going to go out of business in January, the short interest percentage rose up to 224%. That's why. And so now they've stopped doing that, and they've gone back to their shorting through the exchange traded returns, exchange equity total return swaps, exchange traded funds, etc. This is causing big waves. All right, and this is why. Slide one thing over here. Sorry, guys. So these total return swaps and ETFs that are being shorted, they're not shorting AMC and GameStop directly. This is why we say this is the same stock. AMC and GameStop are in two different sectors. One's a movie company, one's a game company. They do slightly different things, but they're not in the same sector, but they run exactly the same. That's because they're the same stock packaged in hundreds of exchange-traded funds. These exchange-traded funds are then shorted, manipulated, and bought and sold over and over and over again to manipulate us. And every 3 months, here from February through March, there's a run-up of when they have to return these upcoming futures. They have to roll them over for another 3 months. And what do? Then they short the stock. They have some delta hedging, short the stock for weeks on end. Have a little run-up because they're starting to cover over here for their futures. And then during the 2-week time period when they are covering their futures contracts, this is what we're seeing. Runs up. Boom. Boom. You know, this run-up here is from $35 all the way up to $260 for GameStop. And then it got shorted down. And then we had another run up here from $220 all the way up to $340. Then we have some more shorting. They took a big short position immediately after. Look at this big short position they take immediately after this 2-week futures roll period. Huge. And then they continue to short the stock downwards and try to get paper hands to sell out as much as they can. They can't avoid this position when they have $190 trillion in liabilities, and they've been rolling this over since 2006 and 2007, over and over and over again. And they thought they were going to have AMC and GameStop. They thought they were going to get them with COVID, and they didn't. Because 5 million people diamond-handed and said, you're not taking my movies, and you're not taking my fucking video games. I love these companies, and you're not going to steal them from us like you did to Toys R Us, which I know a lot of us loved as kids. And I wish I could take my kids there now, and I can't. You know? So that just gives you a little idea as to what's going on with these total return swaps. So anybody who tells you otherwise that AMC and GameStop are not the same fucking stock doesn't know enough about the market or has their own agenda, in my opinion. Let me answer some more questions. Sorry, let me get this just out of the way here in general, just to not be too obtrusive. So, Musin Tabati, I hope I answered some of your questions here about my price action. This is the GameStop, but AMC runs exactly the same. We could layer it over right on top of this, and it looks identical. We showed that in the last video from Astro, that guy Astro. He showed us the 1.5 month, 3 month chart, 6 month, 2-year chart for GameStop, and they all were exact, and AMC, and you couldn't tell the difference. He covered up the lines of the time. He hid that underneath the screen. You could see no difference in any of them. You would just guess, and they could all be identical. The 1.5 month chart could have been the 2-year chart. That's how similar they are. With these algorithmic shorting and processes that are occurring with these futures, these ETFs, and these total return swaps. So it's clear, crystal clear, that AMC might have a 19% short interest. GameStop might have a 19 or 20% short interest. But both of them, when you take all the ETFs combined that are being shorted and these total return swaps and these futures contracts that are being rolled over week after week, month after month, quarter after quarter, day after day, reality, they're not 18, 19% shorted. They're hundreds, possibly thousands of percent shorted. Thousands. So all these ETFs need to be bought back when the mother of all short squeeze happens. The debt ceiling issues, the eviction moratorium, real estate crash that's about to happen, people that are losing their homes because of the Supreme Court, people who are losing their apartments because of the Supreme Court, they're not going to be able to get another apartment. They're not going to be able to buy another home, so they're going to be renting. Prices are going to be at all-time highs, even though real estate took a nosedive. It's going to be sick. It's going to be sick. And it's going to cause the mother of all short squeezes. But for the time being, we're going to see nice runs up here. What did we see here? We saw, a 100% run up. What do we see here? 200 to 325. That's about a third of all of it. We saw like a 75% run up there or so. And we're going to see another beautiful run up over here again on GameStop and AMC. So even though we had a great day 2 days ago, But August 25th was a bit of a red day because they were shorting the shit out of it. Look at this day. Okay, you have green, and then a big red day because they need to maintain the price under control. If they just continue it and they don't do this by shorting the futures at this point because they're still trying to roll them over. They may have rolled over some of them and then immediately shorted the ones that they just received. But the majority of it is through other ETFs that they have, like XTSLA, for example. That's one of the ETFs that contains AMC and GameStop that's being manipulated. You can go to Charlie's vids over on YouTube and see a clear step-by-step walkthrough of how this is happening. So I won't do that in this video because other people have already done that and can explain that much better than I am, much better than I could. Let's see, Eric Mings, Susan, Thunda, Michael Jordan, thank you guys for coming. Appreciate you guys asking questions. Please ask away. I'm trying to catch up to all these questions, and I promise I will get to all of them as quickly as I can and ask me anything, period. Thunda said, Marcel, they extended their vacations the last time we crashed. Holy shit, you're right. You don't know, the last time we crashed, they extended their vacations. I believe they just decided to go on a government shutdown and say, fuck it. And that just further hurt our stock market and our economy. But what has happened with these debt ceilings, right? What is going down here with the debt ceiling? This is what goes down. All right, let me just put that back there, minimize it, get it out of the way. Slide it over here, better yet. All right, so in 2015, we got the report that we knew that they were no longer using the RRP. They were not investing anything in the RRP in 2013 during the debt ceiling standoff. All right, and it's the same exact thing that's going on now. And the last two times that this occurred, they downgraded our country's credit, which again hurt our stock market to rating watch negative, and then 2 days later they downgraded us again from an A to an A minus, and then they maintained a negative outlook on the country. So they were ready to downgrade us again. All right. In 2013, while lawmakers in Obama came to an agreement from September 19th to October 20th. I'm sorry, from September 19th to October 9th, the S&P 500 moved below the 50-day moving average and the SPY lost 5.2%. Right? In 2011, there was another debt ceiling crisis issue. I'll show you that now. Super easy. This is now. This was 2020 stock market crash. This is right now because they're not putting any fucking money into it. It's all going to the RRP. Show you guys 2011. What happened during 2011? Exactly this. This. Zero. This is what these treasuries were worth back then. And that was only because of the debt ceiling issue. That actually rebounded afterwards. We're not going to rebound after this one. No fucking way. No way. Let's see 2013. I'll take a look at what happened in the September 2013 debt ceiling crisis. Again. So you can see, same thing, 2011, 2013, debt ceiling issues, time and time again, they avoid the 3-month treasury bill, but only for short periods of time. But now, why are they avoiding it for so long? Because the economy and stock market are in the shitter. They're going to continue to avoid it. They're not going to put any money in this. The overnight reverse repurchase agreements. Where are they? Here. $1.14 trillion a day in overnight repurchase agreements. Where were we back in 2013? Let's take a peek. Wow. So we shot up all the way up to 16 billion. They weren't using it at all. Back in, look at April, they used 1 billion, 1 billion. All of a sudden, the debt ceiling came close, and they just started ramping it up and getting worried. The banks know. Next thing you know, in 2013, they were up to 16.62 billion. But now, because of inflation is so out of control and money printing is so crazy, let me leave that there. Let me show you what the difference between 2013 and 2021 is. This is what we were just looking at, guys. With 58 billion was the high, September 30th. We're not looking at billions anymore. We're looking at 1.2 trillion now. This is huge. It all matters. This is where we're at. Okay? This is terrible news for our economy. These top four banks owe $168 trillion. Right here. There's the proof. All the banks combined, 1,385 of them, they owe $189 trillion. Scroll down a little further for you. I got to the end of the report. I'm at the wrong section. This is the charge-offs of banks and holding companies. What's a holding company? A shell corporation that is literally, according to Oxford Dictionary, meant to hold assets and shares for another company like Citadel. Sorry about that. So yeah, take a look at what happened back in 2008 after the stock market crash, where the charge-offs were. Look what happened back in 2001 after the stock market crash. Charge-offs. Charge-offs. 2008. 2011 debt ceiling. Charge-offs. Where's this fucking chart going to be? It's going to be over out of my fucking screen in 2021. On the next stock market crash. It's going to be way the fuck up here. Michael Jordan says, boss, think the Fed will bail out the subprime brokers based on an emergency crash, similar to how we were locked down and not allowed to work a year based on an emergency pandemic? Damn, MJ, that's a really good question. I think that some might get bailed out, but I think just to keep America afloat. But I think the majority of these banks are probably going to go out of business, and the government will probably throw some of them under the bus. Now, you got to remember that people like Goldman Sachs and JP Morgan and all these banks, Bank of America, they've got a lot of friends in high places, and corruption is rampant. I can't say what's going to happen, but regardless, we got to get paid. We're going to get paid on these derivatives liabilities that they owe us. Susan asks, electricity. Sorry, I'm not sure exactly what your question is. I apologize. Please ask again, and I will be glad to answer it. Papillion asks, what do you think America will look like after this great reset? There will be much, much fewer people in the middle class. I think this is a big attempt to completely eradicate the middle class. There's going to be nothing but the richest of the rich and the poor. And there's not going to be much of a middle class. The baby boomer times of the American dream that they've been selling since the 40s and 50s and 60s is gone. It's dead. The American dream of buying a home and owning a home and you know, raising a family in it, that's dead. Not to say that it's impossible, but it's going to be almost impossible for the vast majority of people, much more so than currently. Much more. Much, much worse. So there's going to be, rentals are going to be extremely expensive. Real estate and shit is going to take a huge dip. The stock market's going to take a huge dip. Things are going to be very, very expensive because inflation is going to continue. Unemployment's going to continue. It does not look good at all. It does not look good at all. Define moon. Moon is massive amounts. I predict the moon for AMC and GME is between $10,000 and $99,000 a share. Why? Because I think that there's 2.5 to 5 billion synthetic shares for each of these companies when you take into account all the synthetic shares that have been sold, the naked calls, the shorts marked as long, the FTDs, the things hiding in offshore holding companies, and all of the exchange-traded funds, total return swaps, credit default swaps, collaborative debt swaps, super senior synthetic collaborative debt obligations, and more that are in these shitty tranches together in mixed bags, hundreds of them, and those are also shorted. So when we have a fucking short squeeze, all of these are going to have to get bought back. And it's going to be ridiculous with the new filings happening. It's going to be an incredible thing, an incredible sight to see. I'm so pumped. I won't be surprised at all if we see 99,000 a share on either one of these two stocks, or both. Let me see here. Now here, this sounds really good, doesn't it? That unemployment was lower in 17 states and stable in 33 states. That's not that great anyway, because unemployment was at 5.4%. It barely declined over the month, and it was lower than in July of 2020. But everyone was forced to sit at home in July of 2020 anyway. This unemployment's going to get worse way before it gets better, much worse. All right. And look at this. The civilian labor force unemployment data are modeled based largely on a survey of households. It's a survey. These numbers are bullshit. These data pertain to individuals by where they reside. I don't know about you guys, but I've never been contacted for any survey to see if I'm employed or not. Nevada had the highest unemployment rate in July of 7.7%, followed by California, New Mexico, New York, Nebraska, California, New Mexico, New York at 7.6%. And the lowest were Nebraska and Utah, two of the states with the lowest population. So yeah, that number is going to be lower. Let's answer some more questions. JW asks, what's up, CBJ, Rodney, all you guys, Truth? Thank you guys, Roman, for coming out. CBJ asks, what up to you two? JW, will putting my gains in a credit union be a safer option? The thing about credit unions is some of them are not FDIC insured, so it actually might not be a safer option. If you do get a credit union, make sure it is FDIC insured up to $250,000. If you have more than that, diversify your banks, or look into a bank that, not like Goldman Sachs, but as an example, large banks that are able to insure your money for more, insure the vast amounts of money that you'll make after the MOASS, even if it is for a very small fee. It'll be worth every penny. All right. So yeah, your accounts aren't going to be frozen. No, you'll be fine. I don't think so, at least. I don't see why that would happen. Okay. Be Real thinks BlackRock's here for China. Let's not forget who's providing them their bankroll. You know, BlackRock has a lot of American interest in it. So I really do feel that it's just another massive corporation here with a lot of governmental and political ties. But that doesn't change the fact that they're out for money and power, and they're going to get it by controlling a lot of farmland, a lot of homes and real estate and land. Period. Apartments. They're going to put everybody in apartments and buildings. They're going to be building more apartment buildings than ever and less residential structures, less new single-family homes, which is already happening, by the way, if you haven't seen my other due diligence. Check out those videos if you like. We could talk about all of this for hours and hours and hours, and I could explain to you the inevitability of this. But I think that after a few minutes, you guys, I would love to go over all of it. And I'll touch on all the questions you guys have, so please throw them at me, because I don't want to just talk about what I want to talk about. I want to talk about what you guys want to know. Yeah, the latest jobs report says there are 8.7 million Americans looking for work, and meaning that there's more than 1 million more job openings than people who can actually fill them. There's 8.7 million Americans looking for work and 9.7 million jobs. So even if every fucking American went out and got a job, there's still not enough jobs to maintain our supply chain. See what I'm getting at here? I've had drivers this week wait at the airline. Not even this week, fucking today. Today, wait at the airlines in Atlanta, in Chicago, in LA for 8 fucking hours. 8 hours, guys. These places don't have bathrooms. They don't have fucking sinks. You're lucky if they have a water fountain, to get loaded with 3 skids, with 9 skids, not even a full truckload. Be Real says America's alive, but I'm not leaving this country. I don't see myself leaving this country anytime soon, but maybe in the far future I might do something like that, or at least get a dual citizenship somewhere else. So who knows? I do have my businesses here in the U.S., and I love this country. I love Chicago. I hate the weather, but there's a lot of other things about it that I do enjoy, and I'm enjoying what we have, and I'm hoping that some Americans And some people around the world will manage to save their pensions, 401ks, or maybe even make a buck by watching these videos and doing their own due diligence and coming to their conclusions. Maybe even going out there and starting their own research, because that's what you should do. Don't take my word for it. Go out there and look it up if you don't think I'm telling the truth, because I've got no vested interest in lying. These videos are not monetized. If there's an ad in this video, it's from YouTube. I did not put it in there, and I will never monetize these videos, because the reason I'm doing this and talking to you guys is for the American people, is for somebody to know about what the fuck's going on. The truth says we'll probably get rich, then hyperinflation will hit and go broke the same day. And I could understand where you're saying it's not going to be like that. Our money's still going to be worth a lot because you're going to be ridiculously rich, because expenses and inflation is going to go up for everybody. But you're going to be so much more better off if you were part of the MOASS and timed everything with a half decent, at least half decently to make some good money. You're going to be just fine, and the inflation will eventually come back down and things will adjust. But before that happens, okay, let me take that back. It will never come down to what it was before, but things will level off a little bit eventually, but not before things get out of hand further and worse than they currently are. And Stephen Duran, thank you for coming. He says, the sad part is how oblivious the general population is to what about to happen. I think about it every time I see people out in public, and so do I. And I can't sleep at night when I think that I know this stuff. And I've looked at it, and I've done hundreds and hundreds of hours of due diligence and written these pieces that are 40,000 characters long, because that's the maximum that I could put into this thread, and multiple of them, multiples of them, one after the next with due diligence of different things and different treasuries and bonds and bills, diligence that I could provide to people like yourselves. I did it for myself and for my companies and for my investments in AMC and GameStop, and to see what I'm going to invest my money and my companies are going to invest in the future. And I figured that out because of these reports. Sadly, while I was at it, I also realized that the government is literally telling us that these banks are about to bankrupt our economy, whether we like it or not. We're going to see the newest federal H8 report tomorrow at 4:15 p.m., and I will post a new video about it at that time. But just taking a look here. They increased their liabilities by $19 trillion on this table. They were $19 trillion. I'm sorry. They increased by $1.5 trillion year over year. But the amount of profit was only up about $100 billion. So they made $100 billion in profit, yet they're over leveraged $19 trillion. And it's increasing by $1.5 trillion year over year as of right now. That's an exponential number. It's going to continue to grow larger and larger over time. All right, sorry about that. I muted my mic for a moment because I had a cough. This blunt's getting to me, but let's keep the questions going, guys. Denzel says, on point, man. Thank you, man. I don't even want to be on point at this point. I want to be wrong about this shit. I wish I was wrong. But these things don't lie, man. Look, here's the next table. 19.89 trillion in liabilities, up from 18.0 a year ago. At the same time, so they've increased $1.9 trillion in losses just to make $100 billion. What's going to happen when the stock market crashes and they get margin called and all these new October 1st margin requirements of $1 trillion for the banks are implemented, and the September 1st margin requirements for hedge funds of 250K are implemented, and the new margin requirements in September 20th for all hedge funds and market makers are implemented? Margin calls out the ass, because they're going to realize that they have this much 189 trillion fucking dollars that they owe, and that they can't pay it back. So they're going to get margin called and liquidated. That's the top 4 banks on this orange bar. This is the top 4 banks in options. These options are up 5,000. I'm sorry, not options. Swaps. These swaps are up 5,000% in the year 2021. 5,000% increase. 3,600% of it increased in banks, and 1,400% of it increased in holding companies, shell companies, offshore, Cayman Islands, Caribbeans, Brazil, London. Get it? LIBOR rates. Why? Because rates are cheaper. They can fucking borrow money from London at record lows right now. Damn it, where the fuck's it at? Okay, well, it says you here, but I'm looking for the chart. It's 0.24, and a year ago it was 1.44. I had it here somewhere. Your LIBOR, which is the cost to borrow for London, is significantly decreasing because they need it to. Thank you. Here we go. Check this out. What do you guys notice? Lower lows, lower highs, all the way down from 1990, from the 1980s, all the way through 2020. And we are now way down fucking here. This is the cost to borrow for London, for any hedge funds over there. Okay. And so that they're going over there and they are using these 3-month futures contracts, these, 1 month and longer other ETFs, and they're shorting them and they're borrowing the money to short them over in London and Cayman Islands and Caribbean and Brazil because they're trying to filter them overseas because these derivatives, because of the Dodd-Frank Act, became illegal to use in the United States. So they could still buy them and then send them to London and use these fucking return swaps and pretend that everything's A-okay because Dodd-Frank doesn't have precedence in London or Cayman Islands or the Caribbean. So it's just another part of the bubble that's about to pop. Let's see. Let's answer some more questions, guys. Thank you. No, the truth. So thank you, guys. Life Park Thunder. All of you. Thank you for coming and talking about this. Let me see here. Sorry if I lost if I missed something. Eric Stevens says, dude, this eviction thing feels different. It's really got me fucked up. My heart goes out to tenants, but landlords also get hit hard. It just feels like a situation where everyone was lied to. And you're absolutely right, man. We've all been being fucking lied to. It doesn't matter if COVID is real or fake. It doesn't matter. The fact is the government needs COVID spending. It's the top 2 contributors to the GDP. The government spending COVID money that they printed and American spending money that was given to us for COVID stimulus that the government printed. All of this is what's contributing to stimulus. People aren't working. People are losing their homes and their apartments. The real estate market is tanking. The fucking house down that over here that I've been talking about, that thing's still for sale. And guess what? The price, it was for sale for $309 when they listed it, and for 3.5 months ago. And just the other day I looked at it, it's now for sale for $260. $309 to $260, guys. That's a big fucking difference. 1,000, of course, that's 309,000. Now it's currently listed for 260,000 in 3.5 months. Where in January I paid asking price for my house. I was more than happy to do so, and I'm still happy with my purchase. But I don't plan to sell anytime soon, and I'm not hurting, thankfully. So I'll be all right. But unfortunately, many Americans won't. I hate to say it, and that's fucking sucks, and it pisses me off. And that's why we're here talking about this stuff right now at 12:30 in the morning Central Time, 1:30 in the morning Eastern Time. So I applaud all you, you midnight owls and you people staying up late to stay up to discuss this and ask these questions, because you guys are the ones who are really asking the important questions. And to be honest with you, how do you hedge against this? You invest in AMC and GameStop and other things that go inverse to the market, like the VIX, And that's just an example. It's not something I'm recommending to you. It's just an example of what certain people are doing, like I'm doing, AMC and GameStop. I completely liquidated my mom's 401k. She's 64 years old. I don't want her to lose her money like we did back in 2020. We lost the vast majority of it, and we had to earn it back tooth and nail. I had to invest it for her over and over again in multiple different ways to get that back, and we finally did. And I'm not about to let her lose it again, so I liquidated her 401k. We got a check sitting over there for a very good amount of money that I'm not going to invest in the market yet until after this goes. I'm going to put it into an IRA for her. We're going to invest some of it in AMC and GameStop, and I'm going to leave the rest sitting in her own, vault. Let's put it that way, so that they can't put it in these shitty bonds and treasuries, and us get stuck holding the bag when these fucking things go negative and the banks sell it off hard. Not happening. So that's what I did. That's what I did with my mother, and because I love her, and if I could, and I know her finances. And anybody else, I would recommend that you talk to your certified public accountant. If you don't have one, go fucking get one. Everybody needs a CPA. They're cheap. Trust me, with your MOASS money, you won't mind giving them $75 an hour to give you advice that's going to save you tens of thousands, maybe millions of dollars in taxes and fees. Jim Tuner says the Federal Reserve becomes everyone's landlord. Yeah, man. And suddenly their dream of universal public housing becomes a reality. These things aren't stretch. You're not even stretching. It's common sense things almost. You just use your own analytics here as to what's happening with these markets. Really. And I mean this here when I say this shit, man. You know, because I ain't selling until they fire Janet Yellen. I mean all this right here, without a doubt. I won't liquidate until the SEC stops using money to masturbate. Work time and taxpayer money to masturbate, that's for sure. And I'll be staying long until the price is wrong, because it always is. Eventually, it'll be right. The MOASS will kick it off, and they'll have to admit that the price is wrong. Let me turn this gain down on the microphone just a little bit. See, Linda. Nice to see you. Thank you for coming out. This is our economy right now. This is our stock market right now. Just waiting. Waiting to get the rug pulled out. Steele said unemployment during the Great Depression was around 25%. Do I think it'll be close or more? Honestly, I think it'll be a little bit less, in my opinion. But the issues at hand aren't just unemployment at this one. This is a lot of issues that were not in existence during the Great Depression. These banks were not about to go bankrupt during the Great Depression. You know? They didn't have this amount of student loans that they're going to have to pay back during the Great Depression. These banks didn't owe $189 trillion back then. In 1999, they were complaining because banks had $33 trillion in derivatives liabilities. $33 trillion. That was back here. And then the stock market crashed. And now we're at $190 trillion. What the fuck? These things don't lie, my friends. This is the amount of gross credit exposure eliminated through bilateral netting. They're eliminating less and less because they're not able to eliminate their exposure any further. This is the proof. The netting benefit is significantly dropping. Netting means basically rehypothecation. Netting means that they're borrowing each other, they're selling each other shit that they've already sold each other. Goldman Sachs sells something to Bank of America, who then takes it and sells it to JP Morgan, who then takes it and sells it to Wells Fargo. And then they all can say that they had assets from the sale and liabilities from the sale that were removed. But they've all sold the same thing 4 times. They're playing hot potato. So the effects, the actual efficiency of bilateral netting, this nefarious practice that should be illegal, is getting lower and lower. It was up in the 91% range back in 2013. Oh, look what happened in the 2013 stock market crash. During the look at that, I didn't even notice that. That's a Q3, Q4 of 2013 during the debt ceiling crisis. Bam! Their bilateral netting became a lot less beneficial. And again in 2018, and that was a huge one. And then again in 2020. Oh, no, that's back here. This was 2019, and then 2020. And, oh, man, I'm looking forward to seeing these banks get wiped the fuck out. I'll tell you that much. And again, these are the charge-offs. These are their losses. After the 2011 debt ceiling crisis, after the 2008 crash, after the 2000 crash, after the 2020 crash. This next one for 2022, I'm telling you guys, is going to be way the fuck up here off the charts. Jim Tuner, they've been building the apartments for the last 5 years in preparation for what's going to happen. Absolutely right. BlackRock has been buying real estate for years, and they have really ramped up over the last few weeks. What else have they ramped up in? Buying AMC and fucking GameStop, as well as Fidelity and Vanguard. Jeff Dunford, my man, I got to give you a shout out for this one. He says, look into banks with ISCS programs if you're going to have more than 250K. That's a great point. An ISCS program is something that allows you to maintain money in the bank for more than 250,000 while maintaining it federally insured through the Federal Depository Insurance Corporation, FDIC. Sipping on piss says, what significant levels do you look for when it comes to the dollar? Man, the dollar's fucking dropping left and right. I'll pull up my interactive brokerage account right now and show you guys. The dollar just took a wipe, tanked a little bit just a couple of days ago. And it's done so week over week, month over month. It's not getting better. The dollar's hurting. Excuse me one second while I log in. Bear with me, guys. It won't take long. It's my long-ass password right there. Spark up a blunt, spark up a cigarette, and grab a beer. We're going for a ride on Interactive Brokers. You guys are going to see a little thing about the dollar and just how bad the dollars are around the world right now. All right. Give me a second, just while it pops up here. Bear with me if you see some flashing on the screen. It won't take long. Let's see. Be Sensible says, we try to warn people. That's all we can do. And that's exactly right, my friend. That's all we can do. And it's not even a warning. It's just like trying to analyze this data and show it to you, and then you can decide what you want to do with it for yourself. Eric Stevens says, who's holding 90% of the funds meant to go to landlords and why? The federal government. The U.S. Treasury has only been able to pass out 6% of the money, the $90 billion that was given out, that was supposed to be given out for the eviction moratorium. They added this $90 billion to our GDP for the year of 2021. See, they're lying on our GDP. They've only given out 6%. They're not able to pay the bills. They have a debt ceiling that is they cannot spend any more money. So they can't give out the rest of this money. And now the eviction moratorium just got swiped out from under their feet. So by the time landlords and everybody gets this fucking money, the renters that receive it are not going to give it to the landlords because they're going to be long kicked out. If they're lucky, they get it. Because again, it's been this long and they've only gotten, this much money. But that goes to show, with these extraordinary measures and these people not getting paid, close that out. All right. It's going to be even worse issues. All around the board, all across the board. So yeah, only a few $1 billion out of the $90 billion has been sent out. And how many of these tenants actually gave it to their landlord? They couldn't get kicked out anyway. So do you really think that a lot of the people gave it to their landlord? Or do you think that they contributed to the top two contributions by people using stimulus money to the GDP? What was that? Using stimulus money to buy used cars, used car parts, and takeout. Those were the top three contributing factors. So when you take that, then you take state, local, and federal government spending, those 6 factors, those were the top more than 3/4 of the GDP for the year. More than 3/4. Again, look at my other live streams. I've been over this in depth further. Be sensible. Let me see here. Thank you guys very much for coming. Guys and gals, I appreciate all of you so much. Thank you for your support. If you find any value, please like the video. Please share. Please throw it out there on Twitter, Facebook, wherever you think you can. Because people need to see this information. I don't care about it's not an ego thing for me. I don't care about the likes. Thank you for your support. I'm telling you right now, I'm never going to monetize these videos. It's all about spreading the word and letting people decide for themselves on what is the best decision for their future. Wayne Johnson, thank you very much, man. That's all I'm trying to do is spread the facts and the truth. And to people that don't understand. Like, my mom had no idea what the fuck was going on. She was telling me, well, why are you going to take my money out of the market? It's at all-time highs. Yeah, I know it is. One day, and then the next day, the Dow loses 800 points in a matter of minutes, and the fucking banks come in and scoop it up because the Federal Reserve is telling them to do so. Things are bad. Things are bad. The Chain, thanks for coming, brother. Appreciate you. Go ahead, anybody who's got to go to bed, of course, I appreciate you guys. Go ahead and go get some sleep. I know it is late. You could always rewatch the end of this video tomorrow after it gets posted up. But check this out. Let's launch the event calendar for the economic events for Interactive Brokers daily lineup and see what we've got. Check this out. That's for later today. Yeah, that's going to be an interesting one here as well on the actual. The consumer confidence is Finland is only at 4.0, and it used to be at 4.4 last month. So it shows you confidence around the world is decreasing. All right. The industry confidence is up for them a little bit, which is good. But let's go back to Thursday because Friday's data hasn't shown up yet. All right. It's just because that's later today. It's currently 12:50 in the morning Central Time. So obviously the market hasn't opened, so Friday's data is not there yet. But look at what happened here in Germany. Consumer confidence in Germany is actually down by over 1%. That's a surprise of 0.5%. So they thought it was going to be down, but it's worse than they imagined. Coincidence? France had a climate manufacturing, which is negligible. The United States core PCE quarter over quarter. You know what this means? It's inflation. PCE is inflation. It's up to 6.1% in the second quarter. 6.1% in the second quarter, guys. That's up 2.5% more than it was in the first quarter. This just was released today. August 26th. This report was released by the United States. The core PCE, that stands for inflation. Let me show you real quick, just so you understand. This is directly from the Bureau of Economic Analysis report for 2021 for the second quarter. The price index for GDP increased 5.7% inflation in the second quarter, compared with an increase of 3.9% in the first. And the PCE price index, the PCE is overall inflation. That increased 6.4% compared with an increase of 3.8%. And this number that was just released, damn, where did that thing go? Sorry about that. The core PCE right here shows that for a quarter of two, it is actually at 6.1%. That's insane. And so yeah, that's what they had for the BIA had on that report already. So it was previously, now it's confirmed. So now they can do their revised bullshit as well. Corporate profits are up 9.7%. But what is that? It's actually down from the prior quarter. So corporate profits are down in the United States by almost an entire percentage from last quarter. There's a lot of layers to these onions. Gen Z Trader, do you think the CAT system, when the CAT system takes over for oats, it can possibly trigger the MOASS? The CAT system is going to be one of those many catalysts that occurs in September, from September 1st through October 1st, being the initial margin requirements, the margin requirements. The CAT system starts September 1st, and then on October 1st, the $1 trillion minimum requirement for all banks, which they must stress test for. And the Federal Reserve is currently stress testing all banks to meet the $1 trillion minimum also. So yes, the oats is going to be one of the many contributing catalysts and factors, because that is completely changing the way that things are working in a lot of these funds, and it's taking a lot of the hedge fund fuckery out of the system. It's beautiful. It's a great system. It's really, really good things for the stock market future, for the mother of all short squeezes, for AMC and GameStop. We're going to be goddamn rich. Not financial advice, but that's just my opinion. And if I'm wrong, fuck it, I'm wrong. But I've bet everything on it. You know, and you guys have seen my Twitter screenshots. I post a lot. Let's see real quick. What do we got? You know what, fuck. Give me 1 second, guys. I need another beer. This fucking water's not cutting it right now. One quick beer. Let me just scroll down here while we're at it. Natural gas stocks have dropped. It was a surprise drop. Does that say 10 billion? $10 billion? Natural gas. Wow. Maybe natural gas is not a very good investment right now. Maybe. That's in the United States. All right, cool. The consumer price index in Tokyo year over year is down, but it's still up month over month. Okay, interesting shit, right, guys? See what I'm saying is like there's so much going on here with these layers in this country. Okay, now let's go real quick into this. Let's see what Germany changes in business climate down 1%, changes in expectations, new expectations down 2.5, surprisingly. Brazil's fucking down. Their current accounts are down almost $1 billion. And that was a surprise down. It's down 1.58 billion, and that they didn't expect that to happen either. Mexico, the monthly economic activity is down. It was a surprise, down 0.6% or further than they expected. The monthly economic activity, month over month, is down 0.6% further than expected. Wow. What else we got? The Mexico's GDP is down 0.2% further than they thought. United States durables, ex-defense, down 1.2%. Durable goods orders. Military spending by the government is down. Why is it down? Because they have no fucking money. The U.S. Treasury can't pay its bills. So Janet Yellen's deciding on what she is and isn't going to pay. Let me adjust this mic a little bit more. All right. We can continue to go over this, and I can continue to show you how shitty our fucking economy is, but I don't want to just be a doom and gloom. Russian industrial output down 6.8, up 6.8%, which is 1.4% less than they thought. United States oil stocks weekly are down 0.75%. Weekly crude down 0.65, further than expected, which is actually down 2.25 million barrels and 2.98 million barrels. That's output of crude oil in America is down almost 3 million barrels. Gas prices and inflation. Your gas prices are about to go up a lot fucking more. Oil stocks too. Price of oil. Heating oil for lamps and shit. Even for emergencies, that's going to go up because they're down in production. Japan. Holy shit. Foreign bond investment in Japan is down 183 billion. Foreign investment in Japan bonds is down $225 billion. So other companies aren't investing in Japan. Foreign investment in Japanese stocks is down almost over $500 billion. That's huge. That means people have really bad sentiment about the Japanese economy and stock market, especially overseas investors from in other parts of the world. Do you see what I'm saying? Is that every day there's multiple layers of issues that are proving the true state of our world in the current GDP, by the way. Croatia. Just another country, right? Their GDP is down by 0.7% in the second quarter. See what I'm saying? Canada's budget is down $24 billion. Anyways, I'm sorry if I ignored you guys. I didn't mean to. I was just kind of rambling. I was looking at your questions and answering. But when you see this, like the proof is in the pudding. Like this is our fucking economy. This is our country, our world, our GDP for the whole entire world. The economic outlook and the sentiment that people like you and me have. And people that really live there, that know what it's like. You know what your store shelves are looking like? What the gas prices are? How much you're paying for rent and taxes and your home mortgage and your interest on your car notes and all this shit? How expensive was it to buy a used car lately? Because that went up 47% this quarter. 47%. Let's see. Starring Eli, hello, sipping on piss. Excuse me. So Eric Stevens, thank you so much for the question about, you know, who's holding 90% of that money for landlords. It's the federal government. They just haven't distributed it. Okay. Papillion, do I see federal legislation happening soon for marijuana? Quite possibly, because the federal government is they're gonna get a lot of money from the capital gains taxes that people like us are going to be spending, and millionaires like BlackRock are going to be paying to the government. The difference is BlackRock's going to be paying a tiny percentage, and you and I, when we make over $1 million on the stock market and AMC and GME, we're going to be paying 40-something%. But if you make under $1 million, then you'll only be paying 23%, I believe. Starring Eli, I can't give you financial advice. I'm just telling you what I did and what I'm seeing. You're going to have to decide based on your own financial stability, your age, your family's issues. Talking to a certified public accountant would be very beneficial, in my opinion, for financial or a financial planner who is not a hedge fund or a market, who's going to want to invest your money for you. A financial planner who will actually help you sort your shit out, like a CPA. Let's see here. Abraham Lincoln, the cost. Oh, yes, the cost to borrow. Guys, I'm sorry. I almost forgot to show the cost to borrow. It went up to 5.6%. Oh, that's all shares. We'll go to Fintel. We'll use iBorrowDesk as well. I fucking love this shit. Where are we at here? This is great. 3 hours ago, they're saying there's only 700,000 AMC shorts available to borrow. That's fantastic. Let me see the GME short interest real quick. We'll just double right back. That's Hong Kong. We need America. That's this one here. And go right back here to AMC to look at them both. Bam! 9 hours ago, the U.S. AMC short B borrow fee rate, 5.63%. This is great. It is getting so expensive for them to borrow in the U.S. And that's why they're using things like LIBOR in London and shit and these exchange-traded funds, these total return swaps to short. But what does this mean? That everything that they can't short overseas, like the stocks directly, is now going to be costing them 5.63% to borrow on this. Instead of where it was just yesterday, it was at 1%. 1% to 5.6%. This is great for AMC and GameStop. Even though today, August 26th was a red day because it was shorted, I feel super bullish about August 27th through 9/9. Super fucking bullish. Yeah, these cost to borrow rates are getting more and more expensive. And the FINRA short volume on the 25th was 67 million. 67 million out of 120 million was short volume. What does that tell you guys? Almost 70 million out of 120, that's more than half, 56%, is shorts. Fucking shorts. It's right fucking here. It's every fucking day. Sorry if I'm getting fucking loud. My apologies. Look at these beautiful fails to deliver. The most recent was on July 30th, reported. It was at 38.13. There was 160,000. This is great. And what did we have during the June run-up? Look at this. They're cumulative, so they add up. They add up over time. And then they return somewhere, they move them overseas, and then they add up over time. But they're not going to be able to move them overseas anymore because of the new Phase 5 regulations. Excuse me. Let me go to my own page. I need to find Phase 5 for you real quick. It will only take a moment. Be as quick as I can. Come on, Phase 5. I know I saw you. Even though I could explain it other places, I have a nice little breakdown on my Twitter, so I just wanted to show that to y'all, if it's there. Oh man, that was a lot. The last couple of days, I have tweeted so much. I was doing charts, updates, predictions, and I was very happy with the way it worked out. Made a lot of money with options calls over the last week and a half. Bought a lot more options today, August 26th, on these massive dips. Look at the bull flags on AMC. This is the kind of shit we're seeing now, except now we just saw a nice dip today, but again, it's all short interest percentage, and we saw that. Where the hell is it? There we go. Yeah, so Abraham Lincoln, thank you so much for bringing up the cost to borrow, man. I wanted to cover that in this video, and there's so much content that I forgot to cover it. So thank you for bringing that up, man. That's a huge point in this whole AMC and GameStop and debacle with these $189 trillion and these exchange-traded funds. You know, everything that's going on. The Ortex data that we know about, the failures to deliver, you know, the borrow fee. This is all great news. And when we have massive run-ups, the borrow fee runs up high. You know, after the run-up, the borrow fee gets really high. No, I'm not a fan of this shit. There we go. GameStop. There's only 150,000 short shares available. I'm sorry, I misspoke. According to Fintel. That's fantastic news. All right, what else? They only have 75 million total GameStop shares anyway, like available. This thing, GameStop's probably got 5 billion, 2.5 billion to 5 billion synthetic shares. AMC's probably got 2.5 billion to 5 billion synthetic shares. And then all the ETFs that have synthetic shares and all the ETFs that they're contained in that have to be bought back, buku bucks, we're going to be buku fucking bucks, we're going to be goddamn fucking rich. Plain and simple. Plain and simple. The cost to borrow on GameStop is a little bit cheaper still, but that's all right. That's because they didn't have to work so hard on GameStop, because there's a few less people buying it currently, because not only is there less shares, there's slightly less volume, because it's more expensive. There's nothing wrong with it if you can buy GameStop and AMC. If I can buy GameStop and AMC, which I have, and I will continue to do so, but I buy more AMC because GameStop's more expensive, so I can afford more, which offers me more leverage and more gains. But I'll continue to buy both. GameStop, 55% total short volume ratio today. So 55% of all fucking volume on FINRA was short volume, reported by FINRA. Okay? That is huge. You know people aren't selling it if more than half of it's being shorted. That's why the price is struggling to be brought down, but it is being brought down through manipulation. It's another one of these things that can only go on so far. Again, why can it go on so far only? LIBOR rates are down for now, but they won't be for long. They can only go on so far because these are exponentially rising, report after report, month over month, week after week. Because student loans will now have to be repaid again by millions of people who are already broken out of homes. The reverse repurchase is at record highs, and every time it happens, it's always during 2020 stock market crashes, 2013 stock market crashes from nothing to 50 billion, 2008 stock market crashes, things like that. It went from 0 to 25 billion, and they were never even using it at that time because the banks weren't so over leveraged as bad as they are now. They had to do this to balance the books. And then this, and now we are doing this shit. So what does that show you? 2017, here's 2020 stock market crash. And where the fuck are we? We're way the fuck up here. So wait for the fallout. Because when these things crash, the liquidity will dry up. A lot of their assets and the money that they're maintaining their margin position with, blue chip stocks like Apple and such, they're going to tank because people are going to sell off. And when this happens, they're going to get margin called. So then they're going to have to sell off more of those positions in Apple and other stocks like that, good quality stocks that are going to get sold off even further. and they're going to be buying back because they're going to be forced to by the NSCC and DTCC. And if they don't have enough money and they're not forced to sell off their stocks because of the new filings, the NSCC will go to another bank and hedge fund and say, hey, this asshole just got margin called. Borrow me $500 billion or $50 billion, let's say, because now I got to go buy back $50 billion worth of Citadel's losses. And that's what they're going to do. They're going to go and buy it back. And if it's not enough, they're going to go to another bank and they're going to, hey, we need 10 billion more. Give me 10 billion more because the computer's running the price up. Because the computer doesn't give a shit what the DTCC and NSCC is spending on it because it's not their money. The money belongs to this hedge funds. They don't care if Citadel or these other market makers and hedge funds go broke and go bankrupt. They just want to maintain their position and try to make sure that the NSCC insurance policy gets hit as little as possible. Here's the charge-offs that happen after every major market crash that we're about to start seeing come real hard here. Okay. The derivatives reports that we've already gone over. The $189 trillion. $189 trillion, that are moving here in these positions, in these banks, that they're trading 100% in dark pools for foreign exchange because they're controlling the price of foreign currency. This is interest rate products like the RRP. This is equities. This is precious metals. Look at it. Gold, silver, shit like that. Almost all of it's being traded in dark pools because they're trying to control the price of the bullion and all sorts of crap. So yeah, credit swaps. Almost like 100% for Morgan Stanley and 100% for Goldman Sachs. All right. $189 trillion owed by these banks. That's pretty sad, huh? Look at their assets compared to their derivatives liabilities. Those are notional values. That means that they haven't lost it yet, but it's in the market, and at any moment when they become realized, they will have lost it, and then some. Because it does not include naked shorts. It does not include synthetic shares. It does not include shorts marked as long. A short position is a sale, which is a put. They're placing puts and marking them as call options or calls or shares that are long, but they're not. So what is it doing? It's taking money from here and it's moving it here. And that's not true. So they're cooking the fucking books. This is a federal crime. I hope they go to fucking prison. Look at how many people are losing unemployment benefits. Independent contractors and long-term unemployed are going to lose that $300 weekly boost. And other unemployment benefits that Congress approved at the start of the pandemic are all going to expire in early September, right at the beginning of the month. Another catalyst. Sad to say. 26% of people in this county of Mississippi are back on rent. 22% in Arkansas. 19% in this part of Stanley, South Dakota. What is this? 27% almost of people in South Carolina, Williamsburg, South Carolina, Florence, Sumter, etc. 18% of people in Orange County, New York. 19% in Sullivan. 16% of people in certain areas of Washington are back on behind on rent. And their landlords have to pay the rent still. They have to pay the mortgages still. They're going to lose their homes. And then these tenants are going to get kicked out because the eviction moratorium is over anyway. So they're going to lose their homes because they haven't been able to pay it for 6 to 9 months. And the eviction moratorium, so now that also goes for landlords. So you cannot no longer ask for an extension on your fucking mortgage. So now you owe your mortgage for your home and all the other investment homes that you might have. You're fucked. 17.4% in McKinley, Cibola, Edwards, Texas. It's a nationwide pandemic. And the only states that have like vast swaths of blue are places like Wisconsin, which have mostly homes anyway, because a lot of it, Wisconsin is rural. But even still, it's 10% across the board. Everywhere you go, even the blue ones are 10% and up. That was the lowest one I've seen in 9.9% in probably the most remote part of the country. 8.8% of people in Coconino, Arizona, background. That's probably almost all desert anyway. There's very few people living there, very few apartments. I guarantee you that. Let's look at Alaska. Oh, Jesus. It's not rough enough to live in Alaska. Almost 18% are behind. 12.5, 13. See, Hawaii, most homes in Hawaii are $1 million. You know, so if you're a tenant, you're already poor because you can't own, you know, you don't have $1 million. You get my point? And those are 15, 16%. Hawaii's tiny. You know, 27% of households are back on certain places, 25%. A fourth of every tenant has not paid their rent in Georgetown, South Carolina. That means a fourth of every landlord has not received rent money from them. This isn't from me. I didn't make this up. These are estimates from July 25th, you know, from this company that was hired to do this by the government. $23 billion is outstanding, an average of $3,800. The government allocated $90 billion to be sent out, and only 6% of that's been sent out. Under $5 billion's been sent out. And the tenants can't get kicked out by their landlord anyway, so how many of them actually paid their rent? The landlord still has to pay the mortgage. Evoy says, hey, thanks for coming out, man. Evoy here says, sorry, I didn't want to miss it. Man, this chat's blazing. Thank you guys for coming out and staying up with me till wee hours of the morning. Creon DD, is there any possibility the hedge funds do properly hedge completely all their swaps all throughout the theory process? In DD, it states there's a small window that they're exposed. Nah, no fucking way. No fucking way. These guys they don't owe a few million. They owe hundreds of billions. Hundreds of billions in derivatives liabilities and hundreds of billions of derivatives themselves. They've been selling naked calls, naked shorts, you know, producing naked shorts and synthetic shares left and right. There's no way, no fucking way. I'll bet my life on it, you know. Eric Stevens, appreciate the stream. I'm here to learn. I was just glad someone was up talking about what's going on. Also, Supreme Court did this at 10 p.m. Trying to keep the tinfoil hat off. It just seems a bit sketchy. No, they did it in the afternoon, like around 4 or 5. But with my kids, my family, my businesses, and I just don't have the time to get on much earlier. I was trying to get on around 9 or 10, and I didn't even get on until after 11. So my apologies, and thank you for sticking it out with me. I will re-air this video tomorrow. It will premiere first thing in the morning. And I will, put it out there. So please give it a like, subscribe, share if you guys find value in this, because we got to keep talking about this because things are just going to keep changing and for the worse. I didn't expect this to happen today. I didn't think the Supreme Court was actually going to go over and rule this. I thought the eviction moratorium was going to continue. I thought that they were going to continue with it, and it didn't even really make a difference because by the time that they did go ahead and do a lawsuit or the Supreme Court would look it over, it's already be too late. But actually, this actually makes it worse. This compounds the mother of all short squeezes. It accelerates the mother of all short squeezes. Because now a lot more people are going to be kicked out immediately by the landlord that wants to turn it over to somebody that can pay the rent so that they can continue to pay the rent. Or they're no longer able to pay their mortgage and they're already in the process of bankruptcy. And it's going to be a couple more months before we see these people getting kicked out of their homes. The tenants are getting kicked out of these investment homes. The landlord's going to lose all their investments except for their primary home, primary residence, if they're lucky. And it's just going to get worse and worse. So it's one of the many catalysts that are contributing to the quick decline of the stock market, the economy, the real estate market, the globe, what I'm predicting to be a 100-year bear market based on what other economists have shown. And don't take me for that because I am a bull. But that is what they have shown time and time again is going to happen starting now. Silhouette, thanks for coming out again. I appreciate you. Thank you very much. And I'm not doing God's work. I'm just doing what any good human being would do. Jason Cornell says the Department of Housing and Urban Development under the Obama administration in 2015. Yes, sir. Yes, sir. Be real. This feels like a TED Talk convention. I wish it wasn't. I wish I wasn't here right now talking about this. Um, Madame Defarge, thank you. Eric Mings, where do I see the other heavily shorted stocks going? The other heavily shorted stocks are going up as well, but AMC and GameStop are going to the motherfucking moon. Silhouette, they can't. Silhouette asks, what if somehow they do manipulate their way out of this, and everyone either makes no significant gains or lose other money? I'd bet my life on it right now if I could, man. It's not gonna happen. Starring Eli asks, ain't no way they have to buy back. That's not how this works. No, they do have to buy back eventually. I'm not sure exactly what you're saying, but like I said, I bet you my life right now. I bet you every dollar, all my businesses, everything I own right now, if I could. Sadly. Sippin, let me know about that GME and AMC regarding Josh Dubinsky, the GME merchant manager, and however it's connected to Warner Brothers. I'll definitely look into that. Brienne, thank you very much for coming. I appreciate you. Matters of a CPA for tax and financial planning. Would you recommend a CPA alone or a tax attorney? Ask your CPA. Ask your CPA if you need a tax attorney. Usually your CPA can handle most everything unless you've got some really serious things going on. Eric, thanks for your support, brother. Appreciate you. Michael as well. This is like a financial smoking scan. I love it. Nice work. Thanks for the analysis. Thank you guys. Thank you. I like I said, I've been doing hundreds of hours of DD. Like something about my OCD or autism or some shit over here is allows me to focus on things like business and my family and things like this for sometimes years and years and years on end if that's what it takes to get the outcome that is desired for me. Even if it takes, working 80-hour work weeks. For me, like I said, it started off selfishly looking into AMC and GameStop, and it's just become so much more. It's become the fact that we stand no chance of getting through this without a market collapse and many people dying and going homeless and losing their jobs. That I need to talk about it with people that are willing to be open-minded and so that they could possibly plan for their own futures. That's it. That's all I got. Gen Z Trader, wish you guys all the best. Michael, why bother? Pedro, thanks for coming out. I don't know anything about ASPS stock. I'm sorry I can't comment on that. Mari Sung, thank you so much for coming. I appreciate you. I know I'm on at weird hours of the night. Thanks for your support, everybody. Nancy as well. Please share it, you guys. Please put it out there. Throw a like up there. Not for my ego. I could care less. It's all about the algorithm for YouTube. Because the more way it's shared and liked and commented in YouTube, the more that YouTube will say, okay, people like this. Let me show it to other people that watch these kinds of videos. Papillion, can't believe I'm getting this info for free. I would never think about selling this info, even though most people do, because because it needs to be shared. Period. CBJ after MOASS, help the homeless, bring kids switches, help others. I love it, man. I love it. All of it. All of it matters. Every little thing. Kids don't only just need food and shelter. They also need toys. They need mental stability and things that activate their brain. And I think video games are a wonderful way to do that. Not if it's an addictive amount or hours of it, but I love video games. I grew up playing them, and I wouldn't be who I am without them. And I fucking love GameStop and AMC. So, that being said, I hate to say that see numbers like this, that 25 people in Mississippi, 25% of places in Mississippi and 30% of people in South Carolina are behind on their rent, you know. And let me see here in Chicago by me. I used to live in Cook County. That's 16.3%. You know, I currently live in McHenry. That's 11%. That's not great. That's not great at all. That's terrible. So yeah, guys, we've got the eviction moratorium ending. All these new filings. I never really quite touched on phase 5. So I'll just hit you with that real quick and then we'll call it a day. This is from ISDA. The countdown. As of September 1st, regulatory initial margin requirements will apply for the first time to hundreds of global counterparties that belong to a group or anybody who uses dark pools to trade derivatives. That's what this says in English. Derivative transactions that exceeds 50 billion lira or a similar amount in local currency. Is that lira or euro? I'm sorry, I think that's euro. Whatever. This compliance date is commonly referred to as phase 5. That's just an example, by the way. You know, like that exceeds $50 million. I think that means $50 million. Correct. Yeah. American US dollars. So this compliance date is referred to as phase 5 because it's the 5th global compliance date for phase-in of regulatory since September 2016. They've been working on this since 2016, and shit's about to hit the fucking fan. That's why all these filings have been being pushed so hard by Gary Gensler and the NSCC and Gruber Grual and FINRA and DTCC. More than 300 counterparties with an excess of 3,600 relationships. In English, 300 hedge funds and market and banks that have 3,600 shell corporations hiding their fucking money will become subject to these new IM requirements in phase 5. 1,000 of those relationships may need to exchange the initial margin in the near term following. More than 1,000 of them are going to be actively and probably margin called. There is a high possibility, according to this is telling us in plain fucking English, that more than 1,000 of these hedge holding companies will be or possibly will be margin called for the initial margin requirement in the near term following September 1st. This is big news. I actually have read this a dozen times and I never thought this before. I never realized this. This is big news, you know. These are great filings. They're going to happen for us. And countdowns. So now they're going to be increased. Hedge funds, instead of having 10K a piece, they're going to need 250,000 a piece. That's 25-time increase. Yeah, sure, 250K is not a lot, but 300 counterparties own 3,600 holding companies. 3,600 holding companies are held by these 300 hedge funds and market makers and banks. So now all these assholes are scrambling for money. That's why Melvin Capital took $500 million back from the $2 billion that they, that's why Citadel took $500 million back from Melvin Capital when just a few days ago when they had initially borrowed them $2 billion just last month. Because they need that $500 million to help cover some of these 3,600 holding companies that they have overseas. Because now instead of having 10K a piece, they're going to need 250K a piece. It's a big jump. Because before the four holding companies would cost them 40 grand. Now these 4 holding companies are going to cost them $1 million that they have to maintain in cash collateral. You see why this is so important. Jalen, no problem. I'm glad to talk about phase 5. You know, and your CBJ, the shorts were slowly killing our childhood. KB Toys, Toys R Us, Radio Shack.